On our channel, we published a video on high growth stocks in August 2020. Within 9 months, the portfolio has delivered more than 300% returns and still running. Please check the video by clicking the top right corner link. The top 2 stocks from this portfolio are Apollo Pipes Limited. This stock was suggested at Rs 323 and today it is trading at 1051. And Tips Industries, which was suggested at Rs 139 and today it is trading at Rs 802. So please take some time and check the other stocks as well. You can support my work by joining as a channel member. We have 3 membership levels. Please check the YouTube perks at each level of the channel membership by clicking the join button. Alright, let's move to the content of this video. Are you a beginner in stock markets and looking for investing for long term or for your retirement goals? I understand that you get confused with much of the jargon like bull market, IPOs, paper trades, time cycles, fundamentals, technicals, etc. in the stock markets while picking stocks. Why long-term investing that is beyond 1 year holding period? Because putting your money for the long term in stock markets provides tax advantages on capital gains. The main reason to buy and hold stocks over the long term is that long-term investments almost always outperform the market when investors try and time their investments. However, identifying the right stocks is crucial for beginners in the stock market. If you are looking for long-term stocks, please proceed to watch this video. I'm Dr. Krish. Welcome to our channel KrisDom Investor. Here you get timely, quality and unbiased opinion on the stocks and investment opportunities. COVID-led volatility continued for this month. The government has opened up the vaccination drive to cover a broader age group from 18 to 45 years from 1st May. This brings some clarity that the COVID-19 challenge is more likely to get over in a finite time frame of, say, the next 6 months. PSU banks, energy and metal index provide valuation comfort at the current levels. Media and infra are still undervalued. Valuations for the IT, pharma and auto sector are expensive. IT sector valuations are likely to persist on account of the strong structural theme emerging. Since 15th February, benchmark index Nifty has corrected by 6% from the top, while for the same period 54%, 269 companies out of top 500 companies had given a positive return between 0 to 100%. Almost 230 companies have corrected between 0 to 30% from the Nifty top. The majority of the correction was visible in the BFSI, auto, telecom and media, building material and discretionary space, while positive momentum continued in the IT, healthcare, pharma, agri and metal space. More than 50% of the PSU universe is up from 15th February levels. So which stocks we should bet on for the long term? About this video, here you will see 10 stocks where you can invest blindly. These companies are having sound and resilient business, showing consistent strong financials, having high growth potential. They are the market leaders and strong brand value, strong and effective management. We will also see top 3 undervalued stocks among these 10 stocks. And I will share my opinion on how to allocate funds for investment. Let's move to stock number 1. This company is primarily from oil and gas and has active segments such as telecom, retail and textiles. It is a large cap with a market cap of over 12 lakh crores and ranked number 1. The company name is Reliance Industries. Reliance Industries Limited is a Fortune 500 company and the largest private sector corporation in India. It has evolved from being a textiles and polyester company to an integrated player across energy, materials, retail, entertainment and digital services. Reliance products and services portfolio touches almost all Indians daily across economic and social spectrums. Reliance was founded by Dhirubhai Ambani and is now promoted and managed by his elder son Mukesh Dhirubhai Ambani. Ambani's family have about 50% shareholding in the conglomerate. Its current price is at 1931 rupees. Its all-time high at rupees 2369 and low at rupees 38. With overall returns to the early investors at 3034%. It has passed all the default, growth and quality checks. Stock is 1.71 times as volatile as Nifty. Revenue and profit growth over last 4 years is shown here. Net profit annual growth is higher than historical averages. For example, a decade back, its annual profits stood at 19,294 crores and now at 49,128 crores. I have highlighted the past 4 years returns, which is at 215%. And other fundamental metrics such as trailing 12-month revenue, earnings, cash, debt, etc. are given here. Please pause the video and examine. Positives are that Reliance is increasing its market share, higher than industry revenue growth, higher than industry net income, however, lower than industry current ratio. However, here it shows Reliance is using its assets efficiently. The current dividend yield is at 0.37%. Let's move to stock number 2. This company is from IT services and consulting. It is a large cap with a market cap of over 5 lakh crores and ranked number 5. The company name is Infosys. Infosys is a leading provider of consulting, technology outsourcing, and next generation digital services, enabling clients to execute strategies for their digital transformation. COVID-19 has brought about years of change in the way companies in all sectors and regions do business. Huge business opportunity for the IT companies in the future. Infosys current market price is at 1316 rupees. Its all-time high is at 1477 and low at rupees 32. With overall returns to the early investors at 1351%. It has passed all the default growth and quality checks. Stock is 1.53 times as volatile as Nifty. Revenue and profit growth over last 4 years is shown here. Net profit annual growth is higher than historical averages. For example, a decade back, its annual profit stood at 6,835 crores and now at 19,351 crores. I have highlighted the past 4 years returns, which is at 199%. Other fundamental metrics such as trailing 12-month revenue, earnings, cash, debt, etc. are given here. Please pause the video and examine. Positives are that Infosys having higher than industry revenue growth, increasing market share, however lower than the industry net income. The current dividend yield is at 2.03%. Let's move to stock number 3. This company is from the evergreen sector of FMCG. It is a large cap with a market cap of over 5 lakh crores and ranked number 6. The company name is Hindustan Unilever Limited. HUL. Hindustan Unilever is in the FMCG business comprising home care, beauty and personal care and foods and refreshment segments. The company has manufacturing facilities across the country and sells primarily in India. Given the fact that we are going to see a good consumer-led revival over the next few years, HUL could be a good stock to have in your portfolio. Its current market price is at Rs 2,376. Its all-time high is at Rs 2,614 and a low at Rs 100, with overall returns to the early investors at 790%. It has passed all the default growth and quality checks. Stock is 1.13 times as volatile as Nifty. Revenue and profit growth over last 4 years is shown here. Steady growth can be seen. Net profit annual growth is higher than historical averages. For example, a decade back, its annual profit stood at 2,296 crores and now at 7,995 crores. The last 4 years returns at 182%, and the other fundamental metrics are given here. Please pause the video and examine. Positives are HUL having higher free cash flow growth, lower than industry debt to equity ratio, increasing market share. I don't see any prominent negative factors in this company. The current dividend yield at 1.74%. Let's move to stock number 4. This company is from the iron and steel sector. It is a large cap with a market cap of over 1 lakh crores and ranked number 30. The company name is Tata Steel Limited. Tata Steel is engaged in the presence across the entire value chain of steel manufacturing, from mining and processing iron ore and coal to producing and distributing finished products. It is a cyclical stock and currently we are undergoing a big commodity cycle and it is under expansion phase. Peak may come in between August to December 2022. Hence, stay invested in this stock and add it in every dip. I have listed all the required fundamental info about the company here. From here on, for every stock, I will just tell the stock name and necessary information. You may please pause the video and examine accordingly. Current market price is Rs 1132. Cyclical stocks are difficult to satisfy the quality checks such as Z score, F score, C score, etc. Net profits also exhibit a cyclical trend. The last 4 years return stood at 189%. The current dividend yield is 2.21%. Let's move to stock number 5. The company is from the insurance sector. It is a large cap with a market cap of over 1 lakh crores and ranked number 43. The company name is SBI Life Insurance. SBI Life is a leading life insurance company in India. Offers a range of life insurance plans and policies to help protect yourself and your family. Hence, no need to tell you why to add this stock now. Add it to your portfolio in every dip. Current market price is Rs 978. The last 4 years returns stood at 150%. The current dividend yield is 0.26%. Let's move to stock number 6. This company is from the material segment having a portfolio of cement, chemicals and textiles. It is a large cap with a market cap of around 1 lakh crores and ranked number 49. The company name is Grasim Industries. Grasim Industries Limited is a flagship company of Aditya Birla Group. Core businesses comprise viscose staple fiber, caustic soda, specialty chemicals, rayon grade wood pulp with plants at multiple locations. Current market price is Rs 1367. The last 4 years returns at 22.25%. The current dividend yield is 0.29%. Let's move to stock number 7. This company is from the telecom infrastructure. It is a large cap with a market cap of over 68,000 crores and ranked number 63. The company name is Indus Towers. Indus Towers Limited is engaged in the business of object of inter alia setting up, operating and maintaining wireless communication towers. Presently, the company has over 1,75,000 towers and 3,18,300 locations and a nationwide presence covering all 22 telecom circles. It has a tenancy ratio of 1.8 times. It has a tower market share of 31% and tenancy market share of 42%, which makes it a leader in the telecom tower industry in India. Current market price is Rs 244. Revenues are growing and net profit growth is excellent for over a decade. The last 4 years returns stood at 3.41%. The current dividend yield is 8.23%. Add this stock in sharp dips at CMP. Let's move to stock number 8. The company is from pharma sector. It is a large cap with a market cap of over 60,000 crores and ranked number 75. The company name is Urbindo Pharma. Urbindo Pharma is principally engaged in manufacturing and marketing active pharmaceutical ingredients, generic pharmaceuticals and related services. Recently, it receives approval under PLI scheme for bulk drugs production. Current market price is at 1013 rupees. Its top line and bottom line is in an upward trend for a decade. The last 4 years returns are at 54%. The current dividend yield is 0.4%. Let's move to stock number 9. This company is from the textile sector. It is a small cap with a market cap of over 7,626 crores and ranked number 343. The company name is Vardhman Textiles. Vardhman Textiles is engaged in the business of manufacturing yarn, fabric, acryl fiber and garments. The group has over the years developed as a business conglomerate with a presence in India and in 75 countries across the globe. Atmanirbhar initiative of the government can be treated as a big boost for its business. Current market price is Rs 1,295. The last 4 years returns stood at 5.2%, increasing its market share over the last 5 years, and company's debt is far less compared to its peers. Let's move to stock number 10. This company is from the public banks. It is a large cap with a market cap of over 37,000 crores and ranked number 99. The bank name is Punjab National Bank. Punjab National Bank is India's first Swadeshi bank. PNB is a banking and financial service bank owned by the Government of India. It is the second largest PSU after SBI in India. It has bottomed out recently and fundamentals started improving quarter on quarter. Now it's a turnaround story here. Current market price is Rs 36.25. The last 4 years returns stood at minus 76.6%. 1 year returns of these stocks with reference to the BSE index is presented here. Indus Towers, Hindustan Unilever and Punjab National Bank delivered lower returns, whereas highest returns is delivered by Tata Steel, followed by Grasim, Vardhman and Infosys. My investment strategy is as follows. More weightage to cyclical stocks such as Tata Steel, Vardhman and SBI Life plus Reliance Industries. Divide 1 lakh capital as follows and invest. 12.5% weightage to Tata Steel and Reliance. The rest as shown. Do visit this video after an year of your investment. Please do let me know in the comment section which one of these stocks you own in your portfolio. I will post some additional points on these stocks on my members only wall. You can support my work by enrolling as a channel member. Click the join button and enroll. Thanks for watching. Don't forget to like the video and subscribe to the channel by hitting the bell icon. I will see you again in the next video. Until then, take care of yourself and your investments.